Dear traders, ladies and gentlemen, welcome to episode 12 of our MCA Trading Made Simple series. Today we are talking about our excellent OST indicator, or option strike target indicator, which has been extremely popular in the community since it was introduced various years ago. But let's go step by step. Okay, what is this about? Well, generally speaking, we live in a time where, we have, let's say, the market cap of an underlying asset, okay, and then we have the derivatives on that underlying, okay, options, futures, etc. These days, the market cap for derivatives is so high that we even sometimes have not only the underlying influencing the derivatives, but even the derivatives influencing the underlying. Okay. So what's going on here? You find here under financialsource.co the significance of option expiry levels. Option expiry levels are the price points at which option contracts expire, and they can act as magnets for price movement as market participants aim to hedge or adjust their positions. Each day, major FX expiry options for the New York cut are given. I'm sure you have seen before, for example, on Forex news sites that they quote like option expiry prices and levels. Okay, and to make a long story short, it's basically like stop accumulations. Okay, our option strike indicator shows you where the strike level is, okay, namely here. So this is the target for the price, in which direction it can be long or short, okay, depending on whether there are accumulations of options of dumb money traders which have strike prices that can become targets for the smart money algos. Because guess what? If they hit those target levels, then the options can get assigned. Okay, so we're going to show you examples from reality as always in a second. But generally speaking, so if you see a short signal like this, okay, it means that the price eventually will go here. And it can also be, of course, a long signals. Now, here's the thing, okay, to come straight to the point. You will see periods where you see the OST signal getting filled again, okay? So that's what's so amazing. So you're going to see like those situations where it's going to take this one, take the next one, okay? Like, so you can sell again, place it, take profit, is spread above the target, by the way. We don't place it at the target, is spread above, even sometimes a little more, okay? But what's going on? This is because we don't have, yes, you guessed it, any squeeze going on. The market is in a ranging mode, so these tend to be extremely good trade signals. They don't repaint, they are powerful, people love them, yeah. However, when do you need to be careful? Well, let's look at the other example here, okay? So, to come straight to the point, surprise, surprise, if we have a squeeze going on, be careful, okay? Because the squeeze dominates. Remember, the squeeze always dominates. The algos may decide not to take this OST, okay, and run away. And sometimes there are even more OST signals. But as long as the squeeze line doesn't really go down, do not trade towards the OSTs because the squeeze dominates. Now, if at some point the squeeze line collapses, yes, then you often see that the price reverses and takes even old OSTs in one go. Okay? So, to make it extremely concise, this is the main rule where you have to be careful and you can't just take those trade signals, okay? And we're going to look now at more easy as well as complex examples. Okay, let's do that then. So you often see the option strikes quoted, as I've said before. Okay, so this was taken recently. Okay, this was Australian dollar. The signal comes, it shows you where the price will go, boom. Okay, easy short trade. However, look at this. Okay, unfortunately we cannot take trades if the squeeze is in the way, like here. Okay, because sometimes it will not fill them. But then we have some beautiful examples. This is dollar yen from today. Look at that, easy short trade. Okay, the very easy short trade. You have two option strike signals short. They show you where the price will go. It even does a pullback after the first one, and then even takes the second one. Yeah, no squeeze in the way. Even long is coming in. This is a great trade. People love those kind of trades. Okay. So this was dollar yen from before, when it only took the first one, and then today it took the second target nicely as well, with the MTS in the end even. Okay. Of course, these factors also have an interplay with the other factors like MTS, order gap zones, and all these things. Yeah, the money flow. Of course, it all interacts. The algos are taking everything into account. That's not a secret. Yeah. But it doesn't take a massive amount of discretionary analysis to figure out which OSTs you can trade and which ones you rather skip. Okay? So this is an extremely good indicator. It has been very popular. Some people only trade that, to be honest, but they're very good at knowing which ones they skip. They will not trade them if there's a squeeze, but if the market is ranging, they're going to trade them hard. Yeah. So whenever there's an option strike target signal, evaluate whether there's a squeeze in the way, whether there's dumb money in the way, or whether you can take the trade and take other factors into account, like the higher time frames and these things, which we will come to also in the next episodes. However, having said that, it is a very, very nice signal which has made people a lot of pips over the last years. I would say they come quite frequently, maybe not every single day, but I would say eventually they always come, and if there are no big news in the way, or if there's no big squeeze in the way, it always makes sense to look at the possibility of trading those signals. Of course, some people, they use them as additional information for other trades, which is also fine. In theory, you could even also try to trade the post OST run move if the target got filled, but this is really for advanced traders. Beginners shouldn't try to do that, okay? This is really for traders who understand the market causality and have put in the time and have enough screen time and tape reading experience to do these kind of things, okay? If you don't have that, don't do it, okay? Then that's not a great idea. Now, sometimes we see they get almost filled, and that's why I said, a spread before the target, and then there's a pullback and so on, but often we even see then that there's another move, so these can also be chances, especially if there are other targets as well. Here you see also, like, they took the OST, okay, and then they did a complete counter move right after. Obviously, like, because also some shorties came in and so on, but you see it's pretty much similar to looking at MTS. It's just a completely different source. It's a completely different data point, which is related to strike prices from options, okay, so from derivatives. But as I've explained in the beginning, we can actually see that this is more and more relevant now, okay? So, as you will see, the smart money is more than happy to fill these option strike targets and to take them out one by one with nice moves. So this is literally showing you that these factors such as option strike target accumulations are a relevant factor in the price finding mechanism of the smart money algos. Okay, they literally take that into account regarding the decision whether euro dollar should, or pound yen or the other pairs should do a 30 pip down move first or not. Okay. All right. Keep this one short, but yeah, enjoy it. Just understand. Do not blindly trade those signals neither. Okay. Differentiate whether it's reasonable to expect the option strike price to be hit or whether there's too much money in the way. Let's